A swimming pool, for example, can be very hard to find coverage for a swimming pool with a rental because there's other people there. It's not the person that lives there.
Hey folks, Cameron Stewart here with eXp Realty out of Rome, New York, serving you right here in the Mohawk Valley. I'm sitting down again today with Steve. Well, I'm standing up. Steven's sitting down. We're talking today again with Steven Turnbull from Turnbull Insurance Services out of New Hartford. Steven, what's going on today, buddy?
Doing well. How are you?
I'm hanging in there. Folks, today we're talking about homeowners insurance, of course, but specifically what some differences are with homeowners insurance when it comes to investment properties, and is it more expensive, etc. So Stephen, we'll dive right in here. Is homeowners insurance more expensive for an investment property than for your own property?
The general answer is most of the time, yes. And I say general answer because it can depend on the previous videos we've talked about, the way you have that policy set up, how much coverage you have on it, and the different endorsements and toppings to the pizza that we've talked about in previous videos. The homeowner's policy that you purchase when you reside in the home is set up for that risk. It's set up for you owning the property, you residing there 365 days a year, and that's your house. Whereas the landlord's form or a dwelling form are designed to cover the actual structure and are designed to have other people, which would be your tenants in that case, in the house. The biggest difference with this is there's not coverage on, and folks, when we're talking about not coverage and not coverage, or coverage and not coverage, most lines talking about basic forms, but most cases there's not going to be coverage for the owner's personal property on a landlord's form, because I don't have any of my stuff there. Whereas on a homeowner's form, you have all your furnishings, all your property is in that home. So the basic forms are not going to have that. And again, it's going to be a little bit more expensive than having it because you are not there all the time. You're not there seeing what's going on in the property. You're not the one blowing the candle out. You're not doing these different things. You're leaving that up to your tenants who are residing in that house full time.
I would have to assume that these underwriters understand the dynamic that a renter is not going to have as much incentive to take care of the place as the owner, correct?
Sure. And that's how the companies look at it. And they do some more underwriting as far as, types of dog breeds or different characteristics of the property that may cause, a difference. A swimming pool, for example, can be very hard to find coverage for a swimming pool with a rental because there's other people there. It's not the person that lives there. We can find markets that can do it. It's just different. So these are the different characteristics when the companies are looking at it as a homeowner's form, the person that owns this property that's residing there full time, taking care of that property, versus someone who is buying it as an investment. Other folks are residing there.
Awesome. Good stuff. So now let's say I find a nice 3-unit, okay? 3 units house, and I want to live there rather than rent all 3 units out. Is my homeowner's insurance for that property going to be different if I were living in one of the units rather than renting all 3 out to someone else?
So the classic insurance answer, Cameron, it depends. But in explaining that, it depends on the company. Most companies are looking at, you can do a homeowner's form on up to 4 units as long as you're living there. So perfect example, I had a 2-unit that I lived in, and that was written on a homeowner's form because I was the owner and I resided there and had a tenant that lived upstairs. When we moved out, that's now completely a rental, so we changed it to that landlord's form. So most of the companies will go 1 to 4 units as far as a homeowner's form, but once you get past that 4-unit mark, you're more looking at a commercial risk as far as renting out that, or as far as looking to insure that property.
Makes sense. So folks, if you're interested in buying an investment property, whether you're going to live in it or not, or you're an investor and you're just looking for your next property, if you have any questions for Steven, how do they get a hold of you?
You can find us on Turnbull-insurance.com is our website. You can find us on all social media platforms, or 315-735-9201.
Awesome. And folks, if you're looking for a real estate agent to help you find that next investment property, I'd be happy to help you out. You can reach me at 315-351-2765, www.homesbycameron.com. Serving all your needs in the Mohawk Valley, as Steven is with Turnbull Insurance Services. So Steven, thanks for joining me today, folks. We look forward to speaking with you guys soon.
Thank you.